The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, I'm Basil Chapman on this 17th day of August. My pleasure to be here, Monday through Friday, or 1 at 12 to noon. 12 noon to 1 o'clock. I was thinking ahead because next week I'm going to be doing my show at 8 o'clock, 8 to 8:30 every most mornings. I'm not sure how many mornings. I need that the day, that noontime hour. So I'll be doing it at 8 o'clock and then 8:30. Of course, you will get, we'll switch back to your normal 8:30 time, and that'll be very interesting. The kickoff show. I think that could be quite exciting. Okay, let's go straight to, so that'll be Jason. 8 to 8:30 will be my show, the Tiger Technicians Hour, repeated at noon, and 8:30, of course, you will then get the show that comes on our new show, and that's going to be with Jason Pfaff, and most importantly, that hour will have me and Jason as a repeat. So that should be quite exciting. We'll see what happens. Quick question in the den. Yep, I'll get you some of those questions, and of course got emails. Let's just run the numbers. The Dow yesterday, now the question that one has to ask is, was it just Walmart alone that triggered everything to be able to say, wait a minute, that low that was made under 25,000 at 24,956, I think it was 65 or 56. Let me just check. I forgot to write it in here. 65. Was that the low of this particular move? Have I completely missed it? Because we're now up 700 points from that level. We are trading the Dow's up 86 at 25,646. And I'll go through that in a moment. There were no clues at that particular level to say that we could have in basically 2 days, 3 days altogether, a move that went from under 25,000 to over 25,600. Not that I was looking at. It had to be the trigger. After all, look at all the different levels. You had all these resistance points at the 14-period moving average, the 9-period moving average. Then you had the gap to fill. Very seldom in a market, in an index, do you get a whopper of a move up that takes out what normally would, look, even here, look at that gap that was made back on the 24th, was it? Right there. On the 25th of July, there was a gap up that went from 25,432 to 25,463. And then it comes back down, and to fill it, it took quite a move. It took 2 moves to fill that. This was just in one single move. So I absolutely think that the dynamic changed because it wasn't just Walmart. I spent time yesterday. I'm going to do that again today because I had a question about it. Most people, I think, understand it. It isn't that there was just one stock did it. No, it was a fact that a stock that was flaming. Look, Walmart had plummeted from the 110 level to the 83, was that 83? To the 81 level, 20%, a bear market. And it was still just making a little kind of a cup formation. Walmart is not just a box store. It isn't just a bricks and mortars. It was trying to get into a space that nobody had achieved any success of measurable means at all. Because it's done that, it's done a whole bunch of things. And that's why this is important. What I was saying to subscribers, especially today, is that because of the move to the upside, what we might have done, that if there's a whole bunch of bad news to come up and the market does pull back, the Dow pulls back sharply, it would take a lot of other areas to really tank the Dow to give back over 2,000 points at this stage. I can see 1,500, 2,000 points. We might have used up all the time that we need. After all, 7 months of a consolidation starts to stretch the imagination in any case when you're looking at major indices. Now, with that is when other indices have started to take the lead and have gone to all-time highs. If they all do it in unison, you can say, okay. So that's why it was so important. Even now, Walmart went under yesterday's low and is trading at 99.06, up 42 cents. That is remarkable action, and it's very important because it is this is a pretty important component of the Dow, especially now because all the retail stocks had at some point up, you remember up going to last the season, the Christmas season, New Year's season, the stocks were just terrible. So this is very important. Okay, so I wanted to explain what I'm looking at. Now, in terms of the Dow, yes, we're very close to being stopped out of our 2 short positions in the Dow. Let that be as it may. We'll see what happens because there are a couple of things. I just want to take time. This is a technical Friday. And Monday we start a half-hour show for quite a number of days during the week. So let me do this. You see what I spoke to subscribers this morning when I said the Dow 120-minute chart, the MACD and stochastic has formed a pattern that I call the Chapman wave squash. And what that happens sometimes is that very quickly it can go to a peak A, a peak B, and then a peak C. This is the 120-minute chart. And then the stochastic starts to pull back. It's at 96% now, very strong. And the MACD, so the torque comes from the stochastic, coming from the 200-period exponential moving average, just under 25,000. And then what happens is the torque of the stochastic allows the momentum to go to overdrive in the MACD, the fast-moving average of the MACD, and that takes over. So this is exactly what we're looking at. And what I said is if we make a new leg B, I called it a gray leg B. Now it has to be called, let me just see something here. The high today is 26,667. The last high was 25,692. We're really close to popping over that. So that says that the 120-minute chart tells you that we could rally for at least another couple of days until we get to a D, another day or two before we get to D in the 120-minute chart. And then we've got to assess, is this a V-shaped formation? Is this a brand new blue leg A instead of a gray leg A? The moment it goes above 26,692 in the Dow, that becomes F/E. I'm sorry, F/A. So we're watching it. So the big question for me was, how do I have subscribers who are looking for longer term positions who will be wanting to put in extra money? What do they do? Do they actually start putting it in now rather than waiting for the next pullback and be ready and maybe have a third tranche for a really serious decline, maybe whatever the news is? Well, I'll talk about that with subscribers over the weekend. So Dow right now is up 72 at 25,630. S&P is up 3, only 3. Up 0.28 in the Dow, up 0.11 in the S&P. But the QQQ is down, and I'm going to talk about that next. Technical Friday in the Chapman Wave methodology. Basil Chapman, Tiger Technicians Hour. I'll be right back. Dow's up 72.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, so we're back, and now there are a couple of things that I also want to mention, and that is that within the context of rotation, what we saw in the Dow, and remember I discussed this yesterday, look at the RTH, let me just go there right now, because I just want to finish that theme. So big spike, so that's peak A, big B, big C. So this is a peak C right now in the daily of the retail market vectors ETF, trading at 107.68, up 48 cents. But wait a minute, where is the XRT? The XRT right now is below. It's up 35 cents at 50.97, with the peak E that was made 4 days ago at 51.94. Yeah, it's only a point away, but the pattern is suggesting that it's kind of struggling. Yeah, it doesn't have the Home Depot exuberance. So this is something to watch. That's the bifurcation. So let me just go through this again. Remember the other day we were looking at the my Dow quartet, which is really now a trio. So we went through IBM, and I said IBM had acted very poorly, but it's trying to bounce here. It's still not looking great. Triple M, which had acted horribly, going all the way from 260 down to 190, trading right now 203, up 77 cents. The rotation says that if the industrials start to find some favor here, even though we might find that yields are coming down, which will be an impact on the financial sector within the Dow. We remember we've got 5 financial sector stocks. You might find, look, Triple M is up. Look at Caterpillar, up to something, up 247. Also a horrible chart, but it is trying to find some legs. So this rotation says that you might have weakness in some sectors, but as long as you've got in the weighting, as long as you've got some other sectors, that some other stocks within other sectors within the major ETF structure working, that ameliorates downside. It also says that the upside won't be quite as good because you've got some stocks that are still weak. So Caterpillar's up, and UTX, which I've got, I keep mentioning that we are still long a position, is at 134.38, up $1.07. About to try, oh, it looks like it might even try for that right side, trying to get, it has 2 weeks to get to 139.24. I wonder if it's going to get there before it breaks 129 key support. This is going to be very interesting. Okay, so that's what I want to look at. Now in the S&P is lagging, and it is still up 4.28, which is at 2844.89. There's a very strong resistance. This is the Chapman wave falling axe formation. And within that, you've got a resistance right there that would be at today's high of 280. What am I looking at? Oh, S&P 2846 to 47. Start to go into the 2851 area, and that's going to be right there. Is the resistance breakout level, and we're in the sell zone. So if it can break out above that, that's very positive. MACD is just flat and negative. Stochastic's really not very good, down 52%. I'm watching this because if there's a failure, we might find that, yeah, we make lower lows, but they're really bounces and then a lower low, bounces and then a lower low. And the bounce is using up much needed downside energy if you're short. And if you're long, the down moves are negating that strength. So it says sideways range could unfold in the S&P. Let's go to the QQQ. QQQ right now is trading at 179.25, down 58 cents, down 0.32. It was down quite a lot more earlier on, impacted by the semiconductor index. Went down to 178.27. Yes, we are short. We went short yesterday on that very big spike up because I want you to short the weakest index that will be influenced by the market, because that should start to give back quite a bit of the gains. So we'll see. This is just the start of either a down move. You won't see anything in the Qs to the downside until it breaks 177.50 key support, that area, 177s. Question of the day. Another question. What impact will Federal Reserve Jackson Hole event next Friday have on the S&P and the E-mini direction next week? You know, first of all, I completely forgot about that. Secondly, all I can say is that every day is going to be very important. And you're going to get news that's going to relate, relating to the banks. Let me just show you something. Let me just finish this and I'll go straight to the banks. So the QQQs make it very clear at 179.28, any move above 121.35 says, hey, we're not ready to go down. We might not break out, but we're not ready to go down just yet. Any break into the 177s and then under 177 says, aha, finally, the daily is breaking down. The technicals are very poor in the daily. The weekly technicals are okay. They're good, but they're more okay than good. All right, IWM, where is that? I haven't even looked at that today. IWM up today, up 28 cents at 167.91. This is good action. Why? Because it's stuck within a range. It's holding within the range. The weekly chart says, hey, sideways action going from the bottom of the range to the top and the top to the bottom, etc. But this time it's made a slightly higher low in the weekly chart, and that 165 is going to be absolutely key. Any move under 165 next week says, uh-oh, finally the IWM is probably going to test the very low that was made on the June the 29th, the week of June the 29th at 162.26. That's 5 points away. It's going to have to do a lot of bear movement to do that. Okay, now let's go to XLF. The XLF is, at this point, it is up a tad. Yep, it's up a penny. Holding okay. I'm going to put this in here because I like to draw trend lines. It's very important. Right there. And we don't really have one there. So what we're looking at in the XLF trading at 28.12, a push into the 28.25 area. Now a close above 28.25 would be very positive. We'll be filling the gap and break the downtrend line. And any pullback underneath yesterday's low of 27.87 would be a big negative, not a big negative, a negative for the daily. The weekly chart is still just holding steady and nothing much going on there. So now let's go to gold. Up 1.5. What, by any measure, even on a Friday, I would say under these conditions, having seen such an incredible sell-off, look at that weekly chart in gold. Gold right now, or at least by the end of the day, trading day, should be up 4 to 5 points, and Sunday should be up another 8 or 9. One of the reasons I say that is if you look at the weekly chart, this big arch formation, What we're looking at is we went under the 1170.10 low that was made December of 2016. Went yesterday to 1167.10 and trading now at 1185. That's 20 points higher. That's a good start. Now, why am I saying it's a good start? Because look at these stocks. Look at my ASA. You know, this is just a bellwether that I use. ASA weekly chart. Look at that. That is horrible. ASA is a gold stock. I think 5 or so South African gold stocks trying to form a base here. Just went straight down from the 9.60s to the 8.60s. Actually, just under there. Trading right now at 867. Look at that trough D, a leg D in the weekly chart to the downside. Any rally in gold is going to take a while to repair the damage. I'll be right back.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So I'm looking at Royal Gold as well. So ASA is just something that I use. It's 5 South African stocks, except it's registered in Bermuda, I believe. So Royal Gold has gone from 190, it was 98, I believe. I should have typed that in. 98.53 was the high in July. It's trading now at 77.90, having hit 76.02 yesterday. Almost $30. I mean, $26. That is a whopper of a decline, and in such a short period of time. Not if you're looking at it in the monthly chart, because the monthly chart is exquisite, just a beautiful chart, but suggesting that there's an arch formation forming, and you got to be careful. And this is one of the best gold stocks because it's a royalty, Royal Gold, RGLD, trading at 77.90, up $1.76. Now, what's really important about this, and in many ways, I'm looking at a metaphor here for exactly the situation. Good question about why is Walmart, how can one stock really make a difference? You've missed the big move. This is the summer move, and you're it's only 500 points, 600 points, and we're still short. We'll see whether or not we can keep holding that position. And maybe it won't go down nearly as much. But this is a metaphor in the sense that Royal Gold had held so beautifully through the massive decline in gold. I'm saying massive decline just in terms of the speed that we've come down. It's not yet matched the same speed that we saw back in March, was it? In July of 2016, point-wise, maybe it's almost the same. But what we are looking at is it's been very quick and persistent, and now the stocks have really got clobbered. They didn't get clobbered as badly before. So what I'm saying is that now we'll look at Royal Gold. How does it act, and how does it react when gold eventually, at some point, has a big bull move again, right? I had a question, and I'm going to go to that question because this is Technical Friday, and it's a really important question. Hi, Basil. A lot of talk about housing prices coming down in certain areas. I'm thinking of selling my house in the spring, but wonder if I should sell it now. I live in Shrewsbury, Mass. What do you think? Thank you. So, let me go back. You remember when I was looking out my window back in 2005? And I said, oh my goodness, my neighbor across the street, for the first time, has put his house up for sale, and he's lived there for a very, very long time. He's done a lot of work on the house, put it up for sale, and I'm absolutely convinced that when I saw the price that he got, and the people then next door decided they would also sell, and I said, that's it. I'm putting a sign outside, house for sale. It was on a Friday, and I said, this Sunday I should put, I won't be able to because my wife would like to stay here. But this is the best price that we will see. And this is the moment. Bam, it was August, I think, of 2005. I'm just a long time ago. I'm thinking that's what it was. Well, that turned out to be the weekend of the top. Except that we then got this massive national deterioration in houses in the southern and mid sections of the country, not on the northeast. So I'm still in the house. I would still like to stick that sign out. Now I think it's a little late. It should have been in the spring. That would have been the perfect time. I even said it on the air, said this will be the perfect time. The price, the estimated price of the house is now 30 or more % higher than it was at the top of 2005. So I need to say that because the timing then was perfect, except in the rotational aspect. Oh boy, I hope I've got it so clear in my head. I hope I'm able to explain this. Housing prices here in the Northeast, especially in the Boston area, especially in the western suburbs, held prices 10%, maybe 12% down from the top to the bottom. Let's say on a worst case basis, it was 16. It was nothing like, say, in Florida. And then they came roaring back. And I'm saying to you, keep that in mind. I might be saying this is the top, and then all of a sudden in 2022, I'm holding a sign saying this is the... No, I think that this is very serious. The housing boom that we've seen in Boston, the fact that they're talking about even more hotels to be able to get another World Trade Center, this is just the talk. As long as I've been here for decades, every time they do that, it is just like you're within months to 6 months of a major top. So I'm saying, I believe that if you had to put your house on the market right now, there are two things. One is it should be priced reasonably, rather let people have a fuss to try to get the house that they want. Because if it goes on the market once and then it comes back in the spring of next year, it's kind of tainted. I mean, that's just the way real estate works. I don't have to tell anybody in real estate. It's a weird thing that happens. Luck is involved as well. So I'm saying, yes, if you price it right, because I think the price, if you can get the really good price now, you would be within a certain range next spring. And if the market really comes alive and is 26,700 in the Dow, S&P's up at 3,100 in the spring of next year, if that's the case, then you're going to be able to sell, I think, much easier. So I'm going to say to you, think it through. And if this is like a permanent decision and you know exactly where you're going to go, what you're going to do, how you're going to organize your money, whether or not you're going to have to rebuy in a couple of years because you've got that capital gain, etc., or you don't, it doesn't matter to you. Those are factors that I would consider, because it isn't just the price. It's what you can do with the money afterwards, or what you have to do. So I'm going to say, if you had to ask me, I'm saying to you, if you are thinking of selling, I would set it up to sell now, but I'd get it in really nice condition. And the reason why I would do that is because when the bad times come in real estate, all of a sudden, your house isn't that attractive anymore, because for the same price, people have a choice of 5. And maybe the one house that they really wanted, which they couldn't even close to afford right now, which has the extra bath and the extra room and the 2-car garage, is going to be at the price that they can afford then. And yours is going to have to keep dropping in price if it doesn't have all that. So think about those things. But if you want to raise the cash for a really good purchase that you're now wanting to sell, whether it's a stock or whether it's a house, I would say right now is the time. The market's slowed down a little bit. Absolutely, it's slowed down. I've been hearing for 6 months, I've been hearing fantastic stories and horrible stories. And I'm suggesting to you that if you are thinking of selling, just make sure that whatever you put on the market now is absolutely sellable. Why? You don't want to have to keep making adjustments and changes and then adding this and all. And get it nice. Take a little time, maybe take an extra few weeks if you can find someone to do the work. That's the other thing. When things are this hard, the work that you get done is often shabby because you have to just get somebody to come in and do it. Your regular person is just too busy. So keep all those things in mind. But my answer to you is I wanted to take a little time now because I've had that question from a number of people. And my answer is this, I think, is a great time because you're within the ballpark of the greatest figure that you would have had in the last many years. So that's the answer. We'll be back and we're going to be talking about the NASDAQ.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, so let's get to some of those questions. There was a question about CGC. CGC is right here. Whoops, I typed it in over there. CGC is Canopy, if I can get there. There is Canopy Growth. This is a medical, I think it's called the medical marijuana. I'm not sure. Anyway, this is, the question was for someone in the den who looking to, is this a good place to buy? And my answer is that it's in play because, you know, STX, which is the Constellation Brands. No, I don't believe, is it STX? No, STX is Seagate, of course. STZ. Yeah, STZ is trading. And remember, I said, what on earth could bring this stock down? Constellation Brands, spirits, beer, and then they're going to marijuana or medical, marijuana. 236.62 was the high in May. It's pulling back, monthly chart. I said, what on earth? It's just done everything right. Well, the cost of doing business now might be what's costing it in the chart, because it's from 236 to 201, a 36-point decline. I would say that that's one of the deepest declines it's had in years. And a percentage base, it's certainly one of the best, but in point, it is the biggest. So I'm watching this and I'm saying, okay, that means that CGC is in place. So the answer to the person in the den was yes. I would say in your case, I would start the position. Why? Because it looks to me like every big pullback is going to find buyers because we know that it's in play. It is part of it's becoming more and more part of Constellation Brands, which has the capital to do this. They have the wherewithal, they have the demand, they have the desire to go into, what more could you want in that particular canopy of the products that they have. So, yeah, I think it's in play. And even if it pulls back from the 32 to the 24, you got to be prepared. It's going to be really whippy. But if this is your longer term type positioning that you like to add to over a period of time because you're looking at years, and this fits right in that category. And Mike then says, yep, it's the end thing. Yeah, I mean, we're going through that right here in Newton, in Massachusetts. Newton, they very quickly passed the yes to marijuana. Now there's the big problem. Wait a minute, we can have medical marijuana store, one or two, but now the recreational, and now nobody knows what to do. Because you have recreation, I can assure you home prices in Newton are going to go down dramatically, incremental to the number of storefronts that you have. That's my opinion. So we'll see. What about, so the question is, what about US Steel X trading right on the 200 period exponential moving average? That's at 28.41, trading right now at 29.79, having bounced over the last few days, just off that number. You know, I'm looking at this, I'm saying that we are going to, build up some cash position. It's really important. You're going to have unbelievable buys come in the next few months. Just keep thinking that. And if you are wanting to position yourself for the longer term, I'm just saying, let this whole consolidation phase that started end of January in the Dow, the S&P, New York Stock Exchange, and some one or two other indices, and then later on March, etc., in some of the later ones, and the QQQs were even later. Let this whole consolidation play out. They're going to be fantastic buys. In the meantime, we might start to think of nibbling in some things that have been very badly hurt, like maybe a caterpillar, maybe a deer. Just don't know if I'm ready yet. This is a nice start to see there's a bounce. U.S. Steel, what is the other one that's NEU is New Core, I believe. That's New Market. Okay, NEU. Oh, I don't remember that. Well, the other one is AK Steel. That wasn't doing as well. Yeah, that's a small one. It's up very nicely from $4 to $4.33. But yeah, you're be able to get really good positions. That's my thinking. So if you go to the TLT right now, TLT I think is making a leg D. Yep, it's gone to a leg D. Now this leg D in the daily chart isn't a very strong one. In fact, it's one of the weaker ones we've seen. Look, if you go back, look, that leg D was much stronger than this little tiny leg, very quick leg D. And that one even went to an E. So this says to me stopping at the 200-period moving average and the 121.10s, stopping at the, right here, stopping in leg D. If it pulls back, that's going to be important. But the MACD is improving and the stochastics at 84%. So we have to watch this. And I still contend that yields usually, not all the time, but yields usually do start to pull back as the market weakens, because the Fed gets a little nervous about increasing rates when the market is starting to show some real weakness. We haven't seen real weakness yet. We're starting to see some of it, so watch out. Question about snap. So the TNX right now is down. It's in trough C, but I still contend that it's in this range on the weekly chart, and the range says, yeah, it could pull back to the 2.8 area, and it could rally to the 28.90 area. So it's just kind of stuck in this range, but it's towards the lower end of the rectangle range. Snap Snap is trading at 11.81. This is just not my area of expertise in terms of fundamentals. Probably this weekend, maybe I'll get to speak to my son about it, but Snapchat online trading 11.80, down 37. It looks to me like it needs to do one more test of the 1090s, and then give me a yell when it hits 1090s. But short, I read about the short interest, but short interest sometimes can get even bigger, and then eventually there's an explosive move. I just don't know. Technically, if there wasn't short interest, I'd say, definitely going to be testing 11.20, 10.80 over the next week or two. But if it suddenly goes to 1260, then it could accelerate. Not my expertise. I'm going to look at it again, maybe in a day or two. If you are long, then you have to have an outlook that says Snap has a potential, both fundamentally and technically, to break and hold in the 1260 to 1280 area. I don't want to give it time. My preference would be by Thursday of next week. You want to see it trading at 1265. Then I'd say to you, you know what? Good eye, because this now says it's got some trampoline springboard support. Question I had, so GT says SPY, 320 strike. Let me go to the SPY. 320 strike. Next stop, calls for December. There are buyers today. I think we're going to make a peak E in the weekly chart, which will be an E. There's a chance that this could become a Chapman wave instant restart. That's why I'm not, there are just certain sectors that we are short, that we're looking to short, and there's certain stocks that I'm still trying to buy. I'm trying to have as diverse a portfolio as possible for subscribers. There's a chance that SPY does suddenly kick in, and it goes to the 2A, if I make it clear. GT, If SPY is able to trade a week from today above 287.80, it needs to close there on a weekly basis above 287.80. I will be so impressed. I'll say to you, wow, possible recycle. This is just going up, up, up all the way into the end of the year. I don't know. I can't say that right now. Not at all. Okay, got other questions? Yep, I'll get to them as well. An apple. People want to look at growing an apple. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
For Steve, stay tuned for Dave, and stay tuned for Tom. Here we go. So, question. So the question is, will the SPY rally? Well, I think it's kind of stuck for now. So it needs to really garner some strength by Tuesday. Otherwise, I think it's just trading with slightly lower highs and lower lows coming up. So Deere had earnings and it's up 4.19. Obviously, people like the earnings, 141.49. This is important because the weekly chart is horrible, but it's made these two potential trough Ds in the weekly. So this says if Deere will help Caterpillar to rally as well, this is that rotational aspect. They were terrible stocks over the last week. Now all of a sudden they're looking good. So that answers that question there. So Julie was asking, yeah, let me go to the FXI for your question. So the question is, if I could type it over here instead of on the chart, FXI, and the FXI is the large cap China. It used to be called the Xinjiang. I can't remember the exact name. Now it's called the iShares China Large Cap ETF. Yes. So the question is, you've got the 5,000 Vanguard 5,000 trading near highs. I showed you the all-time, that peak C that was made in the world index. I'm going to suggest to you that for the next week or two, you could be see some stabilization in the China shares. You could see some stabilization, gold attempts, because I think that the dollar is at a peak D. I think it could pull back. Yep, there it is. I think the dollar's going to pull back. It's in that Chapman wave sell zone, so it could pull back and full that. You remember, we often look at errors in charting where there's a price error, and this error says 95.01. I wouldn't be surprised if some part of this error is filled in, and the dollar goes between 90, it says 96.25 right now, goes to the 95.85-ish area, 96.10, 95.85, and then starts to rally again. So that could help gold. That's what I'm saying. Make a list of the gold stocks that you love, and just pick a few, maybe as a trade, being prepared to put in tight stops. I think that's the way to do. Oil could bounce a little bit. It's been hammered. So the commodities might have a little bit of a rebound here. And China, over the next 2 weeks, we've got, or even a week, as we get into talks that are coming up. Dows are 53. So Basil Chapman signing off. Check out my opening call. I think you'll find it very illustrative and hopefully profitable. And I'll be back on Monday at 8 o'clock to do my
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.